There's no asset where it's clearer than with meme coins. There is zero value creation here, right? It's a player versus player game. Prices go up when there's a lot of attention on an asset, prices go down when the attention moves away. Now Bonk is currently rallying quite a bit. The question is, how much higher can it go? Will attention continue to grow further from here? We're going to look at data most people aren't considering. We're trying to figure out where the price of Bonk will go from here. Now Bonk is the largest meme coin on the Solana blockchain. It's at place number 1. It's got a market cap of 2.6 billion. It has recently flipped the official Trump meme coin, which is currently at 2 billion. Now what happened over here? Trump was so large, it was a massive meme coin. Everybody bought into it. Many people outside of crypto heard about it. How come that now Trump is smaller than Bonk in market cap? Here's the answer to that puzzle. This is the Bonk supply over time. Price is the result of demand and supply. And yes, the Bonk supply did grow over time, but the upcoming token inflation isn't really that much anymore. But compare this with the Trump meme coin. It's at 200 million tokens. And by the end of this year, this will more than double. Now, will the demand of Trump really double in the next few months? Will there be hundreds of millions of dollars flowing into the Trump token? I've got my doubts. Thus, Bonk relative to the Trump token is just going straight up. This is a chart you've probably never seen before. I've just made it for this video. It's the Bonk price divided by the Trump price. And since the 19th of January to today, this went up by 390%. And there isn't too much volatility in this chart, right? This is just going straight up. Why is the volatility so low? It's because we remove the overall crypto exposure here. Because that's the thing with crypto, right? Everything goes up at the same time, everything goes down at the same time. There is a lot of correlation. But once we look at relative valuations of one altcoin versus another altcoin, we cancel out that macro change. Because let's say the market as a whole is going up by 10%, then Bonk is going up 10%, Trump is going up 10%. The ratio of the two doesn't change. But once the tokenomics of one altcoin are much worse compared to another one, and one altcoin, say when the market as a whole goes up by 10%, then that particular altcoin only goes up by 8%, the ratio suddenly shows that. And that's why charts like this are so useful. And I believe this is very likely going to continue to rise. Again, because Trump just needs so much additional demand to keep the price up, while Bonk does not need that. But let's have a look at attention, right? Is currently really retail attention driving the Bonk price? I make videos on Bonk regularly on this channel, and we can simply have a look at the views of Bonk videos here. The very first video was published 2 years ago, or to be more specific, 612 days ago. And that video did outperform the average video. So the average video is here in gray, and that very first Bonk video made more than 200 subscribers. It outperformed the average video. Now, the recent Bonk video is very different. It tends to be rather a low performer, as in the average video tends to do better. And so far, that video only made 25 subscribers. So I do not believe that this video will get a lot of views. I still make videos like this because I think it's just interesting to see how those things perform long term. And I do also think that there is some alpha or potential outperformance in assets that most people do not have on their radar. Here's the problem. Most people just look at an asset price in US dollars and they just look at this on a linear scale and they see a chart like this. And it's very hard to say at what point in time is this going up? At what point in time will this top? Should it make sense to still buy Bonk and hope for an additional rally of 60%? Or should we rather now potentially even bet on falling prices? It's not that obvious from a chart like this. We can improve this slightly by looking at a logarithmic scale. Now the bottoms and the tops align a bit better. But what's even better than that is to look at the relative valuation to Solana. Again, we look at Bonk relative to Solana in order to cancel out the overall macro environment, how the market as a whole is going up and down. Or in other words, how is Bonk relatively performing? Does it make sense to be in Bonk over just being in Solana? And here the bottoms, they're not perfectly aligning, but they are in similar regions. The same is the case for the tops, right? It's not perfect, but in general, right, the tops tend to be in similar regions. And this tells us that maybe this was already it for Bonk. Yes, we could go up again slightly, 26% or so outperformance versus Solana. But is that outperformance really worth the potential risk of Bonk crashing by 55, maybe even almost 60% versus Solana? I'm not so sure. Again, meme coin trading does not create any value. It's a player versus player game. And the question is always, what's the potential upside? If you're already gambling with meme coins, if you take on all of that risk, we need to have proper upside potential as well. If Bonk cannot do another 5x, then why even bother? And Bonk is already the largest meme coin on Solana with 2.6 billion. Will it really reach 5 or 10 billion US dollars when the market as a whole is flat? That's really the big question. Yes, if all of the market is going up, right? When Bitcoin suddenly doubles, of course, Bonk can go up as well. But will it outperform when it's already that heavy? I am not so sure. The trading volume on the Solana chain directly isn't really that high compared to what we have seen in the past. Instead, what is moving the price is not the spot market, but it's the perpetual futures market. We've got much more trading volume over here. Most perpetual futures traders are betting on rising prices, so the longs have to pay the shorts to get more price exposure. But the issue is that the open interest, so the dollars that are currently bet on the Bonk price, are at a historical high. They're at very similar levels to where we had been in November of 2024 when the Bonk price peaked the last time. And just have a look at how much this short-term leverage correlates with the Bonk price as well. As there is a lot of perpetual futures that bet on the price, the spot price tends to follow as well. And once the perp traders move to the next asset, the spot price tends to follow with a time lag as well. And there's a good chance that we're going to see the exact same thing repeating itself again. Right now, it's mainly the shorts that are getting liquidated during that rally, but this will turn around, right? And once we crash, the liquidations on the long side will be much larger than the liquidations that we saw on the short side. Again, because the majority of people are currently betting on rising prices of Bonk still. And I find that fascinating, given Bonk's relative price to Solana at the moment and given its market cap within the Solana ecosystem. Hoping for another doubling or tripling of Bonk relative to Solana or relative to Bitcoin, I think is a pretty risky bet. Mark my words, but 1 year from now, Bonk relative to Solana is very likely going to be lower compared to where it is today. It's simply just how the asset behaved in the past, and it's simply just an expression of how much short-term capital there currently is in the asset through the perpetual futures market. Now, I do have an announcement to make. I always talk about how to bet on relative valuations, right? How some altcoins might outperform or underperform Bitcoin and Ethereum, and how those relative valuations aren't that volatile, right? We tend to see relatively clear trends, and how there's quite a bit of alpha to be made with this, right? We can outperform using those clear trends. The only issue is that for most people, this is a bit too complicated, right? You have to learn the platform, you have to learn risk management, how to adjust stop losses, etc. And so here's now the big announcement. I have launched for a small number of people to just deposit capital into a capital pool and then automatically copy trade whatever I do. The launch happened 24 hours ago for the annual subscribers of premium of this channel. And it's already going well. Of course, there might be some volatility to the downside, but currently we are 1.7% already in profit. Before that launch, I tried this out myself on a personal account. So I started with 40K, moved this to 60K within 2.5 months. And while I don't expect to get the same kinds of returns when moving more capital and when maybe luck isn't that much on our side, I still believe that the strategies we are using will yield long-term risk-adjusted positive returns. So in the early days, I did this all with borrowing and lending platforms with DeFi. Now I moved to perpetual futures, right? Bets on the price. But this relative valuation bet approach, I already do this for almost 4 years. So that's what this chart is showing, right? If I just dollar cost averaged into Bitcoin, I would have gotten this light gray line as return. But instead, I got the black line in return. And here is how I do this. I check for altcoins that have a quickly rising supply, while the demand doesn't grow at the same rate. So this is the example of Balancer. I show this very often here publicly on this channel as well. Of course, there are way more examples that I share in the closed community. But because of that token inflation, relative valuations tend to go up very, very steeply. So this is now Ethereum relative to Balancer. So we go short Balancer, or we borrow the Balancer token, right? We profit when Balancer goes down, and we we go long the thing that we believe will outperform. And then we get a chart like this. It's a strategy that works for many altcoins. Just have a look at the overall altcoin unlocks over time. So how much new supply hits the market and how much capital needs to flow into the market just to keep prices stable. This here is weekly unlocks, and it tends to be in the hundreds of millions of dollars every week. Especially this week is extremely aggressive with unlocks. And so this is the return we get, but that happens because this is the actual performance of the altcoin. And this is a chart we see very, very often. Just have a look at your favorite altcoin with high unlocks relative to Bitcoin, relative to Ethereum, and you're likely going to see a chart that goes down quite consistently. Who's getting all the tokens? Who's benefiting from this? It's the founders, it's the contributors, it's the early investors. They are all dumping on retail. So when you're wondering why your altcoin portfolio tends to underperform Bitcoin all the time, it's because of that, right? It's because all those people dump on you regularly. And so that's how we make money as well. We make money when the insiders dump on retail, and most retail investors don't know how to play the game. I made a lot of tutorial videos on the topic, how to bet on relative valuations with perpetual futures, how to do proper risk management with those bets. And then also, and this is the big thing, right? How to provide capital to a capital pool so that every trade that I make automatically gets copied with your funds as well. So that something like this isn't theory, but actually becomes practice for yourself as well. You don't have to necessarily go through all of those tutorial videos and have to do active trading all the time if you don't have the time. If you do want to trade yourself, there is obviously the offer, because I do share my trades in real time as well, right? For example, here, this is the balancer short that I announced on the 19th of July of last year. So that was over here. Since then, balancer outperformed Ethereum by more than 116%. And so if you've got some capital, but also some time, then there's the monthly membership, right? You just sign up, you watch a few tutorial videos, and then you can copy trade whatever I do. And of course, also do additional trades besides that. If you don't have much time though, if you cannot do the active trading yourself and you're busy with maybe managing a business or a very busy job, you've got the capital, you don't have the time, then you can also automatically copy trade me. The automatic copy trading feature is available for the annual subscribers. So if you sign up for the annual premium membership, you get a bit of savings as well, but you also get access to the automatic copy trading, which again, I've just recently started. We don't know yet how this will perform, but in the last 2.5 months on my private account, it did pretty well. And very long term with borrowing and lending platforms, it also did pretty well. I can't guarantee that it will continue to work in the future, right? Prior returns are no indication of future returns, as people say. But in general, I try to get the odds in our favor. Right? When everybody dumps on retail, we can still profit from that if we set ourselves up accordingly. A link to premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.